Audio morning brief for the U.S. stock market. I'm Rich Pass for Critical Point. It's 8:06 a.m. Eastern Time, February 1st. So we're starting a brand new month. So all the funds are going to start thinking, okay, what do we set up here for strategy for this month? And do we need to sell more first, buy later, or do we need to buy first, and so forth? Yesterday, the stock market did not like what the Fed Reserve said, and they, in my opinion, overreacted. It's a bit puzzling to me they could be that bearish when I think everybody knew there was no guarantees the Fed would say they'll cut rates in March, that they knew it would be summer, but it's kind of like market just now all of a sudden, woe is us. Now the Fed Reserve was kind of stern about the idea that's probably it's going to be summertime and later to lower interest rates. It's probably not going to be March, okay? But again, it's looking more like we've overreacted to this Fed Reserve moment and forgot the fact that the economy is growing. It's growing very well, and even the Fed Reserve acknowledged that, and that stock prices are worth more relative to these businesses. So I believe this is just a level 3 downtrend. We thought we had it on the way up, but that was the earliest allowed, and the market has changed its mind and decided to put it in late, and also to become more volatile and bearish off the Fed Reserve. Now, if you look at the amount of price decline and the volatility, this is kind of like a typical Fed Reserve meeting that we've had since 2022, okay? It's not typical when you look back 10, 20 years. So indeed, we've trained ourselves to be more negative than positive off Fed Reserve meetings, but to also be more aggressive and fast moving regardless if they're positive or negative. Do something, make it happen, hit the market, okay? And so at any rate, the model is suggesting that we want to look for a level 3 bottom today into early next week, and we should assume the market's going to be up next week, and should be up next week into the following week. So we have a chance the first half of Feb can be up. Now we also have a sizable gap down created yesterday when the overnight market of futures were lower. The cash market came in, kind of picked its head up a little bit, but overall it respected the futures market. And then it went even lower still. And then when the Federal Reserve comes out, it goes lower still and actually has a little panic moment. And the interesting thing is the bonds rallied during that time. The interest rates fell sharply, and yet they sold stocks anyways. Normally, they would have bought stocks off the lower interest. So something was going on where they weren't playing the way they normally do on a day-to-day basis. But again, I still think it's one of these special event types trading. It's not telling us the day-to-day routine trading, the true machine, the true supply and demand. At any rate, that gap is large enough that it is going to get filled someday, somehow, sometime, some way. Okay, so the market's going up. But in the moment, the L3 trend is down. The level 4 trend is down, and the level 4 is really a swing, not a trend, is how I view it, because it's so short term. And the level 4 should bottom today. But the problem is, maybe because we're finishing off a week here, maybe a few people are a little bruised and a little concerned. We may not get much of a level 4 bounce today and tomorrow, and we may see it slip lower still early next week, then put that level 3 in. But the point is, the level 3 can occur today with a level 4 bottom. So looking out tomorrow, I think we're going to see at least pick up its head, and we may see a turnaround action today when it was down, then up, okay? And for the moment, the futures have actually been up 20 points, so they're going to create maybe a gap up at 9:30 a.m. Eastern Time when the day session, the real stock market opens, okay? And they may have to sell it to fill that gap, and maybe they'll continue to sell. But I would like to see them sell something just to fill the gap, because I'd rather not have it, because it can be a magnet and a nuisance as we move higher. I'd like to see just fill it in and then move higher. Market's quite oversold. It's met our better downside objectives, and unfortunately, there's not much there for chart support till we get to 4,800 to 4,750. I can't imagine them being that bearish right now. If it is, then we've probably been off the mark that the market did rally too high too fast from November to now, and we know it did, but it doesn't look like it's so extreme that we need to backfill this market and stall out for long periods of time or anything like that. So the best forecast is the market's probably going higher for early February, and it may peak out earlier than we'd like, but the best forecast now, and it really has been this way, but now this setback is actually causing the model to say this could be a healthy thing by backing this market off, providing another dip to buy, and the model's pushing even harder for the idea that the market ought to rally into the week of February 19th or later. And that would be later than what the seasonal people would like. They think the market should top out by mid-February, but they are still leaving the door open, I believe, for a bit of rally here in early Feb. So I think we're going to get past this. It was a little more drama than I wanted to see, but when you look at the history of these reports since 2022, this is actually normal behavior, believe it or not. So I'm looking for a turnaround and staying with the idea we're going to see some buying in February and put the market back up. It may now be more difficult to get up to the 5013, okay, by February, but we'll see. Okay, we'll take it one step at a time. And then in March, yes, I do see some selling, and then I see record highs April, May, June, and I'm still long-term bullish this year and this decade. At any rate, how about interest rates? Interest rates are a bit puzzling that they didn't pay any attention to the Fed saying they probably won't cut in March. So to me, the interest rates kind of dropped a little too much here, and they were very determined. The bond traders were just saying, we're going to pay no attention to the Fed Reserve, we're going to put it down. It's almost like the bond market's saying, no, the Fed will cut sooner than you think. And I think the bond market's kind of helping us out business-wise. Now, there's been some scares at one of the banks. I think it's New York Bank Corp. that bought one of the blow-up banks there last year or something. Now it's got its own problems. Its stock has fallen. So that might be providing a little jitters here, but I'm not picking up any signs that we got a problem. But let's face it, these higher interest rates have cost some banks quite a bit of money here on their balance sheets, at least. That doesn't mean they will truly wind up with that cost. Some of those assets or liabilities on paper, they're really settled at a certain date, just like a bond. If you hold a bond and it's going to settle in 2 years, but in year number one, the interest rates go against you, your bond can lose a lot on paper. But if you hold it to the second year when it settles, you find you don't lost anything. You got what you originally invested in. So some of that stuff can blow over. But yes, there are concerns that there's too much interest rate cost here for the government, private sector, and the banking system because of these higher interest rates. But I think the Fed, as long as they cut by May, I think we're going to be okay here. And as long as they continue to cut into next year, we'll be okay. If they wait to the end of this year, I think they're going to cut too late and they're going to create more problems next year. But we already knew we'd probably have some problems next year. So I think the market needs to settle down and think this through. And I think they're going to realize even if the Fed doesn't cut this summer a little bit later, the economy is still going to move forward, business is going to make money, and the stock market ought to move higher. All right, I've given you some downside potential, but we don't have any clear targets. The better, higher probability targets were met. And I've given you some upside potential with the gap filling at least, and up towards the current record high. We have that, and we still have outstanding targets long-term for later this year, like 5013 and even much higher than that. And basically, I'm just saying, it looks like to me everything's on track. This is a standard operating procedure, standard behavior relative to how the Fed does things, but also how does the market react to it. I think we got just speculators causing this decline when long-term investors are probably not paying any attention to the Fed Reserve. Past results are not necessarily indicative of future results, and I'll do the weekly update a little later this morning, and then I'll probably do a monthly update tomorrow, but it may be delayed to early next week. And that monthly update, I'm going to put in a little fun super cycle stuff that we've created here. Thank you.